Hi, Kerry here. We talk a lot about making money and making good investment decisions by investing in the stock market or real estate or whatever our investment portfolio might be made up of. And then I always say that the second goal is to learn to keep more of what we make by understanding our tax code. So what I do every year is do some tax planning, and I do it in November. I like to do it about halfway through November because that gives me about a month and a half to get anything done that I can do to make sure that I send as little as possible, that is legally possible, off to the various government entities that ask for taxes from me. So that's what I want this video to be about. I want to share with you my income, and then I want to share with you some tax planning that I'm doing. It's not exact. I'm not figuring my taxes. I don't deal with the progressive tax code. I deal with brackets. And I want to come away with an estimate of what my exposure is and what I can do to minimize my exposure. So I'm going to show you this in two different ways. One is if I was an individual filing taxes, much as you and most people do. And then the other, in the real world, that I'm an LLC and that I have some tax advantages by being a limited liability corporation. And I want you to understand how I do that. So with that in mind, I'm going to share my income. I'm then going to share my tax planning, and we'll see if I can make a difference. My goal is to pay as little as I am required to, and I think I can reduce my taxes potentially, if I'm willing to do some things that are legal, by almost 90%. So let's first of all say I am certainly not your tax attorney, and I'm also not your financial advisor. I'll be right back.
Best of Us Investors presents Kerry Griegmeyer.
Okay, the first thing that you start with in your tax planning is what is going to be your projected income. You should create a chart, an Excel spreadsheet. I love Excel spreadsheets that shows what your income is going to be or what you project your income to be at the end of the year. Again, these are not exact numbers. That I leave to my CPA, Sarah. So here is a projection of my income that I do. I actually do this on a weekly basis, update the numbers, and keep a handle on what I'm making. So you see, the first thing is my Social Security. I'm 77 years old. Nita and I both pay Social Security. I did a little bit in real estate this year. I have some book sales. I have some affiliate marketing. And then I have my YouTube income, some sponsorship income that I have people who have paid me to sponsor their products on my YouTube channels. I have 2 channels. And then my investments. Now, my investments don't really impact my income much because most of my investments are done in my IRAs. I do have to take a required minimum distribution, but within my non-qualified accounts, I don't trade. I basically buy and hold because I don't want to generate capital gains taxes. And I buy in those, in the non-qualified accounts, those stocks that I really want to hold for the rest of my life. So within my income, within my bracket, or excuse my investments, I project that I'm going to have an income or a growth, not a realized income, a growth of about $454,000. So let's then take those numbers and put them on a tax form. So what I do is I Google 1040 tax form, and I print it out. And then I get my last year's tax return to give me a guide as to how my CPA structured my taxes. So here is a picture of my worksheet, if you will, for my 1040 taxes. And as you can see, I have some small numbers here. The first number I want to point out to you, let me put my glasses on, the numbers are a little small, is line 4A. And that's, I anticipate I'm going to have to take a required minimum distribution out of Nita and I's IRAs of roughly $30,000. So that comes across as income. I have a little bit of interest income and some dividends, but not real much. Not much. That's not what I work towards. Then I have my Social Security at $36,000. I estimate that I'm going to pay that half of that is exposed to income taxes. Then you'll see a minus $3,000. I carry forward some long-term capital losses. I got hit pretty hard by the subprime crisis, and since I don't do a lot of trading in my non-qualified accounts anymore, I don't have the capital gains to offset them, so I carry it forward, and the maximum you can report is $3,000. Then this is my income. This is my $340,000 from basically my YouTube gig, okay? And that all adds up to $388,000. Then I have some charitable contributions and some other miscellaneous stuff that I carry forward. That adds another $10,000 or $21,000 to my income, bringing my total income for the year to $338,600. Now, I know we have a progressive system, and we get up to my maximum tax exposure bracket of 24%, but I just put 24% against that, and so my potential exposure is $81,264. I know that's not exact, and I know some of you are going to say that that's not really. It's just a ballpark. It's the maximum I could pay. So then I said, okay, that's if I was reporting this as an individual, but I don't. I'm an LLC. So I have $80,000 worth of business expenses. What is that? I pay some people to help support me with my channel. I buy equipment. Because I travel to do videos, my car is a part, and so I pay part of my car expense on there. When I go places, such as I went to Nashville to do a video on Steve Farmer. I went to Indianapolis to do some videos up there. I'm going to the beach for 2 weeks, and I'll do videos there. All of these are expenses that then I put against my business of close to $80,000. Then, because I'm an LLC, I have an employer. My employer is Best of Us. That's my LLC's name. My employer contributes to my 401k. I also contribute to my 401k, and my employee contributes to her 401k. That's my wife. So between the two of us, we are allowed to contribute $56,000 apiece, or $112,000. So that comes off of my income of $338,000, and I come down to now I have an income of $147,600, and I come down to the 22% tax bracket, and my taxes are now a maximum of $32,472. So I've reduced it substantially. Okay. That's still a lot of money. It's more than I want to pay. So I went to the tax brackets and said, how do I get down from the 22% to the 12%? Well, my income has to be $81,000 between the two of us or less. So that means I've got to reduce my taxable income from $147,600 by $66,600 and bring it down below $81,000. Okay, does that make sense to you? All right. If I can do that, I will bring my tax bill down to $9,720. That's a savings just from where I am at the LLC of $22,752. Okay, that's my goal. In order to do that, I need to create an additional expense within my LLC of $66,600. Now, how am I going to do that? Well, let's do some creative thinking. I'm retired. I like to travel. I like to do videos. What if I bought a 66, or let's say a $56,000 van, RV? You know, one of those things where you got the driver's seat here, and right behind you, you've got some a little kitchen table and a little kitchen area and a bed in the back and a little bathroom in it, and you drive down the road and you travel. And then what if I wrapped it? And what I mean by wrapped it, I made it look like a best of us in retirement and a best of us investors van. So it becomes an advertising vehicle everywhere I go. It's wrapped. Okay. I could get that done probably for $66,000, including the van and the wrapping, and it's an advertising expense. It's totally, if it weighs a certain amount, it's a total write-off in that year. That would get me there. That would get me down to where my taxes are only $9,720. Then I got to thinking, what if I went and bought a building where my office, and put an office in my studio in it, and created a down payment, and I'm going to have to work with my CPA on this, and created it that way, and then I would be able to depreciate that building year after year, and if I buy it right, it's actually appreciating as an investment, and I get my taxes, and every year it gives me a additional tax write-off. That's what I talk about, what I'm talking about, tax planning. I don't just make money and then take my bills and my income to my CPA and say, take care of it. That's basically like doing a doctor. Just eating anything and everything that you want and not getting in any exercise and showing up at the doctor and say, take care of me. I'm obese. I have a bad heart. I have high cholesterol. I have diabetes. Take care of me. No. You get out and you exercise and you keep yourself trim and you don't eat as much as you did last night. Boy, I ate too much and I didn't get any sleep. And anyway, that you need to treat your taxes the same way. Take care of it. Take care of it and plan for it. I will, after we get back from the beach, which is a total tax write-off, I'll go sit down with Sarah and I'll say, look, this is the sheet I worked up and this is my goal. What can I and can't I do? And how I don't want to go to jail, first of all, and I don't want to be fined. So let's stay within the law. And I'm going to use her knowledge to help me reduce my tax exposure, potentially, from $81,264 to $9,720. Now, I got the state also to deal with, but that's what tax planning is, and that's what keeping more of what you make is all about. And again, I want to say, this is not an accurate number. It's a ballpark. It's a plan. And without planning, you don't stand a chance. And think about that. If I reduce my taxes from $81,000 to right about $10,000, that's $71,000 more that I get to keep. Is it worth the effort? You know it is. The other thing I want you to go away from this knowing is you need an LLC, particularly if you've got a side gig, particularly if you've got some source of money that's coming in, and it can be rental property, and get a good CPA and do some tax planning, and even if you don't have these kinds of numbers, every dollar you don't have to write to Uncle Sam and Aunt Judy Judy is what is her name? Our governor, is a saved dollar. So, Kay Ivey, that's it, Kay Ivey. That's our governor. I don't want to send her any more than I have to. Okay. I hope you find that informative. It's not about the stock market. It's not about NEO, and it's not about Tesla, but it's about making money. Making your own money stay in your bank account. Okay. All right. Going to the beach. Going to spend 2 weeks down there. It's a business expense because I will do a video every day, and some of the videos are going to be about living on the beach and investing in property on the beach and real estate. So it's all applicable as a tax write-off. And so I would ask you, give me some comments, what you think of this. If this is the kind of video you'd like to see more of, by all means, subscribe and give it a thumbs up. And if you want to become part of our tribe, that's go to Best of Us Investors, give me your name, your email address, and I'll send you an invitation. Next time I see you, I'll probably be poolside.